Welcome to Wall Street Mindset. Today, we're going to reveal an unknown secret about one of the most widely used indicators in trading, RSI or Relative Strength Index. Can you imagine? The RSI has a concealed feature which is ignored by most traders, but it may change your trade style once and for all. Are you interested? Stick to this article since by its end, you will get what this secret feature is and how it can be useful for you. Let's go deeper. Section 1. What is RSI? The Relative Strength Index, RSI, is a momentum oscillator that measures price movement speed and changeover time. J. Wells Wilder developed RSI in 1978, and ever since, it has been a mainstay of technical analysis. It ranges from 0 to 100 primarily for identifying overbought, oversold conditions in the market. But why does this matter? The RSI helps indicate whether a price trend is strong or weak. Think of it as a thermometer reading market momentum, determining whether a stock or asset might be beginning to boil over or cool off again quickly after that heat has subsided. This could be very helpful when deciding when to enter or exit a trade. Section 2. The mechanics of RSI. Then how exactly does the RSI work? RSI calculated the ratio between up movements and down movements of prices within a given time frame, usually 14 days. This relation then undergoes normalization in its scale that ranges from 0 to 100. Whenever RSI goes over 70, it is generally believed to be overbought, implying that the asset might experience a downward correction. On falling below 30, it is taken as oversold, thus indicating a buying opportunity. But here's the catch: these limits are not fixed. Some traders may use 80 and 20 as their upper and lower thresholds, respectively, based on an asset or market situation. This flexibility is what makes RSI an invaluable instrument for any skilled trader. Section 3. Using RSI to identify reversals. There are several ways in which RSI is commonly used, and one of them involves identifying possible turning points in the market. Just think about a stock that has been on a tear and rising day after day. If the RSI crosses above 70, it might be an indication that the stock is overbought and could correct downwards. In similar fashion, if a stock has been battered down, then the RSI declines below 30, it may indicate that there's too much selling pressure on it, as well as signaling for a recovery. But this is not only about figures. The key lies in understanding its context. For instance, when there's a strong uptrend, RSI may stay above 70 for some time without seeing any significant retracements. You would interpret such RSI readings as telling you that momentum is strong, or trying to short the market right now would be risky. Section 4. New RSI techniques. Well, let's ramp it up a bit. The RSI levels can be looked at in other ways apart from this basic view. One of them is the RSI divergence. This occurs when an asset price moves in an opposite direction as compared to the RSI. For example, say that prices are making new highs and yet the RSI is making lower highs. This could be a signal that upward momentum is waning, and a reversal could be around the corner. RSI resistance, support lines represent another approach. Yes, you can plot trend lines on the RSI itself. Drawing lines across the top and bottom areas of the RSI charts will help you identify possible breakouts or breakdowns quicker than they appear on price charts themselves. As such, you will have an early warning system for potential trend reversals. Section 5. RSI's limitations. Even though the RSI is an effective tool, it's critical to recognize its limitations. The RSI's tendency to issue erroneous signals is one of the main problems, particularly in strongly trending markets. If you merely use the RSI, an asset may stay overbought or oversold for extended periods of time, causing you to make trades too soon. Because of this, experienced traders frequently combine the RSI with additional indicators to validate their signals, such as moving averages, the MACD, or Bollinger Bands. It could be wise to postpone that short trade. For instance, if the RSI shows that the market is overbought but the moving averages are still rising with substantial volume. Section 6. The hidden feature of RSI, the reveal. And now, the moment you've been waiting for. The hidden feature within the RSI that most traders overlook. The RSI failure swing. This is a powerful signal that occurs when the RSI moves into an overbought or oversold territory, then pulls back without crossing the center line, and makes another attempt to reach the overbought or oversold level, but fails to do so. This failure often signals a strong reversal in the market. Here's how it works. Imagine the RSI climbs above 70, signaling an overbought condition. Then it pulls back below 70, only to attempt another move above 70 but fails to do so. This failure to regain the overbought level is a signal that the bullish momentum might be fading, and a reversal could be imminent. The same concept applies to the downside in an oversold market. By identifying RSI failure swings, you can anticipate reversals with greater accuracy and position yourself ahead of the crowd. It's a simple but effective way to strengthen your marketing strategy and capture important market signals. Part 7. Adjust the RSI. Finally, let's talk about the adjustment. The default RSI period is 14 days, but did you know that changing this setting can adjust the RSI to your specific trading style? A trader may want to use a shorter time frame like 7 days for the RSI to react to recent price changes. For example, 21 days might be better to reduce the noise and focus on the bigger picture. In addition, you can set overbought and oversold levels. For example, in a highly volatile market, you can set the overbought level at 80 and the oversold to 20. Adjusted to reduce the number of false positives. This simplicity is why RSI is so important, no matter what your trading style is. A classic secret weapon in your shopping cart. Thanks for watching Wall Street Thinking. If you found this video useful, don't forget to like and subscribe. Hit the bell icon so you don't miss an update.